There you go.
Okay, thanks, mate.
Yep. Okay. So just to start from the beginning, I don't pay attention to volume. I don't pay attention to any of that. The only thing I'm looking for on the chart, for example, is my setup. And when I am selecting a stock, the first thing that you will actually see is, whoops, the contracts. So it can be, they're going to give you a variety of contracts to select. The 0 day expiration will always be at the top if there is one. So I'm always going for 0 days, always, if there is one. If there's not, there could be one for 2 days, 5 days, 7 days. I mean, it just keeps going, 9 days, 10 days, etc. But I always, since I'm an intraday trader, a scalper, I'm always going for the contract with the least time expiration.
Those ones move more because of the time factor.
Well, they don't move more, you just make more.
Okay.
Because the chart is the chart.
Yeah, yeah. Well,
The
I
larger,
like, yeah. Okay, so the time thing, but that pushes people more.
well, it's not so the contract expires the same day. So you'll get a higher percentage on moves like this. Now, this could have been a 100% day. On a bigger expiration, it's barely scratching 20, if
Okay.
that,
Gotcha.
because you have a larger expiration.
Okay.
So if you have a larger expiration, most of the time you're holding that for a couple of days. You have a larger target. But since we're intraday traders, I'm not going anything above 3 days because there's no need. I'm gonna be closing the trade the same day. But I do know that traders use this as a way of risk management. Even if it is a scalp, for example, traders will go for at least 2 to 3 days so that they won't lose as much the same day. It could be the same trade, the same entry, but they're not getting a it's a safer trade pretty much. Now remember, I don't know anything about anything.
Sure.
The only thing I know is picking 0 day and going out of the money. I always go out of the money. My take profit is always out of the money. So that's pretty much my process. But just in the very beginning, to keep it simple, you select your contract. And just to explain it again, the 0 day expirations, you have a higher risk to reward. You have a higher percentage gain. So you can make more, but you can also lose more just as quick. So it's very important to take the trades, more importantly, the bigger trades that move. The faster the move, the more you get paid. And these are the trades where they trap volume. For example, they trap volume at the high, they break structure. Let's say, okay, I'm getting in somewhere around here, but my strike price will be if there is one, let's just say they have the 198 strike available, and this is out of the money. That is what I will select. So I always go out of the money. So for calls, it will be a blue shaded area in the top or a shaded area in general. These are all in the money. For puts, there will be a blue shaded area at the bottom. These are all in the money. Now remember, I never go in the money. Me personally, because I'm looking for the largest risk to reward possible, I go out the money. So someone also asked me, "Oh, but I thought you can't sell stocks." We're technically not ever selling unless you're closing a position. You're either buying a call or buying a put. Now, this is very important
Yeah.
because this is going to get tricky. Now, let's just say you're buying a put. So I select the strike price. Let's just say this is 198. I select 198. I press next. Now I make sure because it's automatically set at limit, and the majority of the times it's automatically set at sale. So what you would have to do, and this is what it looks like, over here to the left, you should see a circle that says buy or sell. Now, the majority of times for me, it's automatically set at sale. So I have to switch this to buy. All you have to do is click it. And then over here, you'll see where it says limit. This will majority of times automatically be set at limit. You have to switch this
To market.
to market. Switch it to market. And then right underneath it, you will see minus and plus. And these are how many contracts you're actually buying. Mine is automatically set at 10. So right now to buy 10 puts of the 209 strike, right now it's 1600, which that's a lot. I'm not paying that. That's too expensive. So what I do, if I do see that it is expensive, I'll just go for a higher strike and see if it's less expensive, and I will go for that instead.
Okay.
But I'm pretty much going for the cheapest offer in general. So let's just say Nvidia sells tomorrow. Now they actually do have a reason to sell. This is the low of the week. Actually, let me double check. Where are we? I mean, yes, we are at the low of the week. They already took out the low of the week. Longs are trapped. Uh, this is the high of the year. Jeez.
Oh, really?
Mm, we could see a continuation long. Maybe not tomorrow, but this is giving a this could continue. But let's just say they continue short tomorrow. And I want to select the 203 strike area. Or as a matter of fact, let me just see which one they give me right now. So I'm gonna go for what's today? The 29th. Tomorrow will be the 30th. They don't April 29th. Was let me just see. Let me see. 203, 205. Let's do 205. I'm gonna select that. So I just selected it. Now I switched the sell button to buy because I have to buy the put.
Right.
And I switched limit to market. Now, right now, to buy one share is $185, which is not bad. Um,
One contract.
one contract. Now, typically it's cheaper than that during the actual US session. But 185 is not bad. So if you wanted to go ahead and sell now, your strike would be 205. So here's 205. Now remember, I treat my strike price as a take profit. The farther it out it is, the higher your potential of making money you get. Now we actually ended this day with a P formation high, P formation low, 1, 2, and they already pumped it up into the end of the day. So we could see a rollover tomorrow. And tomorrow is the range reversal day. So there is a high possibility that this can happen. But it is also a high probability of maybe this happening. But they would have to get back above this high because this was the previous yearly high, which we've broken that with a higher high. They dumped it down. Now, again, I have no idea what they're gonna do. But we got an inside day, and then the very next day they triggered lows, making that a lower low, which is the recipe for the pump and dump. Now, remember, I have no idea, but that's just an example. So, step one, select your stock. Now, in the very beginning, it's best to stick to maybe two or three of them. So just pick two or three of them and stick to that. I really like Apple. I like Meta a lot. I like Netflix. These are some big movers. Let's go to
What was the news that drove that big move down on Netflix, mate?
well, that wasn't actually news. Oh wait, no, that was news. That was earnings.
Oh, really?
Yeah.
Had pretty bad earnings.
Uh, well, I have no idea how to read that stuff again. I don't know anything about anything. All I know is day one, day two, day three, session one, session two, session three.
Yeah.
That's the only thing that really matters to me. All that extra data stuff, again, I I don't know. And I don't actually care because, for example, let's see, what time did this happen? Let me go to a good one. Netflix gave a decent trade not too long ago. It was here. For example, this is all I know. Trap and shift 10 a.m. That's all I know. I would most likely be selecting the 97.50 strike. Again, 10 a.m. entry. They take out or they come back to the closing price of Friday, and I'm out. I'm out maybe with 100, 110, 150% done for the day. Now, if it was a call, same thing. The only difference is I would be on the other side of the options chain and I will always go in the money. I'm always looking to go in the money. Peak formation high, peak formation low, consolidation, engulfment. Okay, I'm in. What strike would I be selecting? The closest one, 97.50. Calls. And again, this is what that will look like. Calls on the left, puts on the right. Everything in the shaded area is in the money. Shaded area in the money. I never, ever trade in the money. I always trade out of the money. So I'm looking to go or select a strike. If this is a call, for example, my strike that I would select would be on the bottom because these are out of the money. The strike that I would select for puts are at the top because these are out of the money. So the blue shaded area is always in the money. And again, I never go in the money.
So if the re- the the best returns is always there if you manage to get a contract that closes in the money, or you can close your trade in the money versus slightly out of the money. That does affect the amount of return you make.
Now I have no idea. The best way to answer that is if you're selecting a stock that's already, or you're selecting a contract that's already in the money, you're paying more.
Okay.
You're paying less, way less
Yeah.
if it's out of the money.
Okay.
Like it's not even funny how much less. Let's say again, cost. Let's say you went for let's say your entry was here. This is where you got in, but you bought the 95 strike zone, which will be in the money. It will be somewhere up here. Let's just say this is the 95. This will probably cost you, let's say, $300 for one share. But if you went out of the money, for example, the 98, and let's just say 98 is somewhere down here, you're only paying $50 for one share.
Okay.
So that's how much less you're paying. And that's why I always just go out of the money.
Yeah.
You're paying less. But I also stick to um low or expiration dates that are close. So not all stocks have 0 day expiration. If they don't have 0 day, okay, I'll go 2 days out. I'll go 3 days out, but I won't go any more than 3 days out because I'm not swing trading.
Yeah.
So there's no need to go more than 3 days out. But you will see this first. You select the expiry, and then next you will see this, and this should be this is pretty universal. So even if you were on a different platform, um, the calls are on the left, puts on the right. The calls on the top lefts are in the money. The puts on the bottom right are in the money. And I never touch those.
Yeah.
So let's see. One more thing. The just to review one more time, actually, after you select your contract, the very next thing that you will see is again on the left side of the screen. You'll see a circle that says either buy or sell. I'm always buying the
Right.
call or the put, and I always go market. So it will say market. It will say limit at first. You have to switch it to market. And then right underneath it, minus sign, plus sign. Let's just say you're buying 5 contracts. It'll tell you how much, 75. And then you press, and then you select. You complete the order. Now, when you're closing the trade, you are going to this same spot. So if you're closing a trade, uh, in the very where it shows your P&L, the screen that shows your P&L, you hold your P&L until you see a button that says close position. It's pretty simple. You hold it until you see close position. And then this will show up again. You're going to switch this to sell because in order to close a position, you have to sell them back. And then you're selling. So, for example, if you bought 5 shares, you're going to sell 5 shares to close it. and you sell them at market. But other than that, that is literally all I know. I think it's actually pretty funny that people use all type of different things to trade stocks when it's just price action. Here's the opening range. And look what happened at the opening range. Look what happened at the high of the week, initial balance. This is just a market that broke out, pulled back, and continued. Pretty simple.
Yeah, exactly the same thing outside of the. It's just a different instrument you're having to work with.
Mm-hmm. The platform can be a little confusing at first. I actually demo traded for like 2 weeks before I went live,
Oh
just
yeah,
to get used to the actual like feel of it, because it is a little different. It's very different actually compared to Forex or futures. But the mobile app is pretty straightforward. You have your watch list. You have your chart, which I don't use the charts on there. Then you have the trade section. So, for
you
example,
just use trading view charts for it.
correct.
Yeah,
Yeah, I don't think it's pretty pointless to use Thinkorswim charts, period. I just use it for execution only.
yeah. I had a little bit of a look at them. They didn't excite me a whole bunch.
Hmm. Yeah, I can't put my indicators on there or anything, so it's like bummer.
Yeah, yeah,
But just remember, with this style of trading, you don't ever have to buy a contract in the money. You're always going out of the money.
yeah.
Now, this is actually where the major round numbers come in really handy because my take profit will always be a major round number. My strike price will always be a major round number. So, for example, if I wanted to sell tomorrow, if I had, you know, a thesis that they will sell tomorrow and I wanted to target 95 strike, that's the major round number. So that would be my target. If I wanted to buy this tomorrow, 102.50 will be my strike. Somewhere around here will be my entry. And it's always out of the money. Keyword out of the money. I always go out of the money. This is a really good one here. Trap. And then what makes this even more interesting is that I never, ever, 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 ever take a trade before 9:45. Ever. 9:45 opened up, they pulled back, 10 a.m. opened up on the dot. There's your trade. So I'm not trading the trap. I'm trading the shifts. Pretty interesting.
So at this point, what would you consider your percentage of trades would be options versus in the standard, market like what we've been trading before?
I mean, I do the same thing every week. I'm looking for one on the front side and one on the back side.
Okay, so you're
It's
about the
the
same
same.
on both platforms.
Hmm.
Okay.
Now, if I trade, I haven't traded. What's today? Well, tomorrow's Thursday. Yeah, backside. So if I get a trade tomorrow, which it could be on stocks, futures, forex. If I get a trade in general, I'm done. I already had a trade on the front side on Tuesday.
What'd you get in on?
Gold,
Gold. Okay.
gold shorts. It was in Asia though. New York didn't do a goddamn thing. It was already way, way down there. But Asia, at the high of the day, in the third hour, that setup that we just seen on Nvidia, they did the same thing over here. I'm not trading the trap because that's the trap. I'm trading the shifts.
Okay, I was around at that time, I think, and I completely missed that one. So I don't know. My head was up the button a pretty big way on that one, I guess.
Mm-hmm.
Did you hold that all day?
No, I just held it to the previous week low. I should have.
Yeah.
I mean, I knew they were gonna drop. I don't.
You were calling gold to drop last week.
Yep. And they did exactly that.
Yeah.
Like that was pretty obvious. They
You're
were
like
there.
you're like Jeremiah the prophet, aren't you, mate?
Yes, sir. Longs are trapped. Guess where they're going?
Yeah.
They're gonna go hit these stops. Funny enough, that's exactly what happened. Jeez. Jeez Louise. Breakouts, pull back, breakout, pull back, blow off. Trap, which we don't have to trade that. I'm not trading that. I'm trading the expansion leg, the shifts.
Yeah.
Trap and shifts. But there is light in keeping everything dummy simple. That's my motto. Keep it extremely simple. Let's see what might be setting up for tomorrow. The first thing I'm gonna look for is closing break. I mean, gold closing breakout. But um, we just got to be careful. I mean, we are at the low of the month. The closing breakout shorts got triggered, and they are now underwater. So let's just see if they stay underwater. Let's see. So gold is definitely on my watch list. Let's continue. Let's look at the indexes. US 30 closed in breakouts. They just trapped longs. Oh, whoops. Yeah, they just trapped longs. Interesting. The Dow Jones can continue short. Longs are trapped even yesterday. So we have our opening range Monday, which they did trigger the previous day's low. That's a lower low. Tuesday triggered the high, trapped longs. And Wednesday, after they gave us this beautiful lower low, they continued short. This was right at open. Beautiful short trade. I'm really upset that I missed that. But it is what it is. One, two, three. Peak formation low, peak formation high, break in structure, lower lows, get in. But they closed in breakout, and they were in a consolidation for quite some time. Where could we be heading? Back. Oh, shoot, they already got there. Interesting. Regardless of the fact, US 30 is on my list. tomorrow. What about Nas? Wow, Nas is doing the complete opposites. Interesting.
They usually go more together.
Yeah. Looks like the S&P and the Nas are on the same page. This is still a very, very, very strong trend. Interesting. I'm gonna skip Nas and S&P. I'm only gonna stick to the Dow. Why? Because they already started breaking down. But we'll see, because that is a breakout. This is just a higher high. So we will see. Let's go to the majors. Let's see. No signal from yesterday. That is and I mean barely. They closed in breakout. So closing breakout on the euro, closing breakout on Aussie, closing breakout on New Zealand. Let's see, where are they? These have some potential. Longs are trapped. They're definitely underwater. We know that for sure. They triggered and trapped longs up top. And if they trap everyone above that prior month's closing price, it's over with. Which they might just do that tomorrow. Same here. This would technically be a death line. What do I mean by death line? Let me explain. So a death line is whenever, for example, higher high, higher low, higher high, higher low, failure to go higher. There are buyers above that higher low, though. If they break through that, the buyers above that higher low are trapped. And that is exactly what just happened right here. Buyers are trapped. My bias is shorts. This will be the very first target here. So New Zealand dollar will be interesting. New Zealand is also another pair you can trade in Asia, by the way. Look how beautiful that setup was.
Mate, the problem is it's New Zealand. I got a problem with New Zealand. It's like Oklahoma to Texas, mate. They beat us in the rugby. It's a despicable nation.
Yeah.
You
Yeah.
keep your stinking Kiwis.
Yeah, they are they're pretty weird. Um, but Asia sets up really nice on New Zealand. So just keep that in mind. Even right now, there's a quick nail and bail back to the closing price. But back to the charts. Uh, there are a lot of charts that actually look really weird. This is the first day of the trading month. They're right at that level. They may have already trapped shorts. So we have trap traders on both sides, which means we're in a range. So you'd have to be careful. But let's see if there's anything setting up for the actual week. Jeez, what is that? Oh, that was everybody from the previous week. Yeah, they're all underwater. I must have drew that on a bigger time frame. I did. Yeah. Yeah, this I'm bullish. I'm bullish on Swiss franc. Higher highs. Look for the dump and pump. Shorts are trapped. Yeah. Interesting chart, by the way. Nonetheless, let's go to the next one. US yen. Interesting. We are. So this is the first thing I'm looking for on any chart. First thing I'm looking for is trap volume from these levels. Closing price, high of day, low of day. There are shorts trapped below the monthly close, and they just closed in breakout. At the high of the week, we could possibly see a reversal tomorrow, but I have no idea. I will definitely add this to my watch list. This is the most interesting one out of all of the majors. And then for the stocks, this is a hack. I have to tell you this. I don't use the daily charts for stocks because there's gaps.
Yeah.
I use a 24-hour chart for stocks.
Okay.
1 second. And the reason why is because the daily chart starts at 9:30. The 24-hour chart starts at the beginning of the day. So with that being said, I would much rather use a 24-hour chart than a daily chart. And here we go. GameStop closing breakout. Reddit closing breakout. SoFi, geez, they are they are gone. MicroStrategy.
Would you leave that one alone just because it's already done?
Yeah. I mean, they are. I don't want to sell low.
Yeah.
I definitely don't want to chase that, even though they actually did sell that before the session. But I'm not chasing.
How do they sell it before the session? How does that work?
You see the yellow box? That's the US session.
Yeah, but how do you get the pre-hour trading? Like, well, I thought all the stocks were shut like then.
I mean, you can't do anything about that. There's pre-market hours, but regardless of the fact, I'm not trading before 9:45. Remember, there's a difference between movement and setups. This is movement. Or this is what I would consider movement, even though they did still give low-hanging fruit during the session. And look what time. Well, it was right at 9:30. So if 9:30 just blast off like that, there's no trade. Yeah,
Yeah.
I'm not chasing that. No trade. It's just movement. It's the matrix. They're just moving. But when there is a setup, let's see. I highly doubt there was one because of FOMC. As you can see, FOMC went on a tangent. Yeah. Yeah, there were no setups. Look at this. That's insane. Yeah. Maybe tomorrow. But anything before 9:45, and that's what makes stocks easy for me because I'm not trading before 9:45. I don't care what happens.
Yeah. So you deal where you set your thing for 5 o'clock in the morning the other day. I made the comment, but I didn't think you'd get up before 9 o'clock in Oklahoma, and you still didn't catch on to that. On
Yeah, that was a huge brain fart of mine. I don't know why I said I don't know why I said AM. I was thinking PM. I really don't know why I said AM. Because that, I mean, everybody should be still asleep. I
Yeah,
was still asleep.
yeah. You were the only one. Everyone else is up.
I was like, oh no, I said the wrong freaking thing. Oh man, that was embarrassing. Yeah, because I said it twice. I said the wrong thing twice. It's like, yeah, 5 a.m. everyone. What's weird is that no one questioned it.
I did. I said I
Well,
didn't think you were up before 9 o'clock, 9 a.m. in Oklahoma.
it didn't hit me like it didn't. No one said like, well, that's
Next
early.
time I'll say, but you're still asleep then.
Right. Okay. Yeah. Make it obvious. Like, okay, who was up at that time? Come on now. Even though people were getting up. But yeah, that was pretty funny. Mhm. That was hilarious. But again, anything before 9:45, no touch. No touch, no touch. I'm looking for the break and retest or the trap and shift. That's what makes it pretty simple.
Yeah.
Break and retest, trap and shift.
So one thing I
So,
get stuck with on the trap and ship versus the break and retest is that in my mind the trade off the trap and shift is off the trap and shift, but then you kind of wait for the break and retest. And so I have a hard time seeing the difference between the two.
well, for example, that's a break and retest. Want to know why? Because it's not up here. The
There's a
trap and
trap and
shift
shift,
will
there's a
be
trap
up
and shift at
there.
the top though, right?
You're correct. Well, the trap and shift would be up here. It's but the session itself, even this is a break and retest. 9:30 broke out and pulled back. 9:30 here actually was the pump. Oh no, it wasn't. 9:30 was the continuation. They had already pumped up before the session opened. But trap and shift is at the high of the day, at the extreme, which none of these actually did. But don't get me wrong, the break and retest is a form of trap and shift because look who they're trapping. Longs. Look who they're trapping. Every trade is a variation of trap and shift. Trend trade, reversal trade, they have to trap someone first. And the trapped traders are always, for example, for a trend trade, it would be below the breakout. A reversal trade, the trap volume would be above the breakout. But remember, trap and shift is at the extreme. So, for example, that this is a trap and shift. Look where you're at.
Yeah,
You're at the high of the week.
yeah.
Look at this. This is at the high of the day. That is also a trap and shift. Same here. It's at the high of that day. But if you're not at the high of that day, okay, you may be in a scenario that is a break and retest.
Okay.
So keep it very simple because they are fundamentally different, but they're still the same because they're both trapping. They just
Right.
do it in a different way.
Okay.
And that is the very first thing I'm looking for a trade. I need to see a trap. That was the breakout up top. And it trapped everyone. Then I will take my trade. Boom. Closing breakout. Explosion. So I would be going for the 210 strike for this. If you didn't go for that, okay, maybe you went for 216. Okay, no worries. You could even go for 220, but the further out, the better. And I always go out of the money. So let's say, for example, let's just say my entry was here. I'm definitely going for 210 strike because that's 150 pips. That's pretty decent move.
Yeah.
They trap traders and they reversed. So,
Okay. Well, that works. That actually, like I was say, it's been a while since I've done it, but that kind of keeps it simple. And as you're saying, I was remembering all the stuff you were saying, but as I say, it's just a while, and
mhm.
I look for YouTube for a lot of stuff. That's how I found you initially, and like, but the options thing, it seems hard to find stuff on YouTube that's worth listening to.
Yeah, yeah, there's very little information out there. I
Yeah,
don't know why.
yeah, I don't understand either because I mean, like, it's not hard, but I guess most people just don't go there. They just trade the forex and the indices.
Hmm.
In reality, that's enough to trade. But all I saw was just that. Well, it seems like you get some awesome setups with the stocks, and then with the live session that you're doing. I figured you'd probably go and look at some stocks at some time, and I want to be able to play.
Hmm.
So I went and
Yep,
got an account.
yep. I mean, it's all based off the signal.
Yeah.
Uh, the signal I abuse the most is the closing breakout.
Okay.
But if it's just not set up, it's just like a day like today where there's a FOMC. I'm not even coming to the chart.
Right.
Like there's no need. Even if there was a trade, FOMC just scares me.
Yeah.
Pretty dangerous.
Yeah,
And
even
they
just looking at the charts last night, to me, they weren't acting like they typically act. And so took a couple of scalps and I cut it for the night.
Mhm. Yeah, these charts have been wonky.
Yeah.
Let's look at gold.
Last week was good, but this week's been kind of off week.
Hmm. Interesting. Gold. Interesting. And gold left very early yesterday. Very early. Breakout pullback. Broken down. Yeah. So, I will go over some stocks, not too many. I have a big watch list. I'm gonna crunch this down to like five, and then we'll just only focus on those five.
Oh, really?
Yeah, I mean, because I have a big watch. I mean, my watch list is huge, but the majority of my trades are on gold, Nas, Google, Apple, Nvidia. Like I've just realized the majority of my trade, I'm trading the same pairs, the same few pairs, because you don't need You don't really need that much.
Yeah.
One or two setups a week is all you need with size.
Well, I traded from what you said the other day, I put a trade on Aussie last night, the night before, and it only had like 20 pips to move. And I ended up put a standard lot on, which there's just no chance that I would have done that everything I taught before. I mean, it was never anything more than a point oh one lot. But I mean, it kind of ends up being the money moves the same as trading Nikkei. I mean, it's only moving a pip at a time, but that pip you got to make it count for a bit more. You know,
Mm-hmm.
I trade Nikkei probably more than anything right now, and I mean that thing's a wild animal. It
Oh
can do
yeah.
300 and 400 pips, and all it did was just look backwards.
Mm-hmm. Oh wow.
Pull Nikkei up right now and see what you're looking at. Japan 225. Pretty bullish right now.
Yeah, it's just like all those on the indexes. Shorts are, excuse me, longs are in the money. So you gotta be very freaking careful with this. But for the week, right now, that doesn't mean they're gonna stay trapped. But right now, shorts are trapped.
Yeah.
So this may just tomorrow may be a really, really good buy day. We'll see. We will see.
When this thing will move 1,000 pips in a day, like on a regular occurrence.
Yeah, gold too.
Yeah.
And silver. And sometimes the indexes just depends on the week. But this is a very volatile instrument.
Yeah. Yeah, it is. I was initially so on the Gates FX, they've got the indexes in the M and then the indexes in the R. And I was initially trading it on the R. And on the R, a point oh one lot is $1 a tick. So
Oh,
that means that a standard lot's got to be $100 a tick, I guess.
what the heck?
That's freaking huge, mate.